I'm Greg Hunter. Welcome to USAWatchdog.com. A few weeks ago, I had Mr. Gold, world-renowned gold expert and market expert, really trading expert, Jim Sinclair on, and people said, "Hey, how come you didn't get Bill Holter on?" Had a tech problem, couldn't get him on. So now I'm going to have him on. He's got lots to talk about. Bill Holter, you're a financial writer at jsmindset.com. You have a lot of brokerage and financial market experience. A expert in precious metals, a broker of precious metals. Am I right? Yes. Yes. Okay. And so, but let's start with the gold and this failure to deliver or stand for delivery or whatever. I mean, it's we've got rich people. Listen, they're not stupid. I mean, come on, who's buying bonds? Give me a break. Rich people are going to buy gold, are they not? And how do we know they're buying gold?
Well, actually, one thing that happened this the past month is the BIS has been more active in the gold market than any time over the last 3 years. It looks like they've supplied in the last month about 100 tons to the market, and over the last year they've supplied about I think it was 400 tons or thereabouts. There has been a big delivery, or deliveries, I should say, into COMEX vaults. I believe the number's 20 million ounces. Now, we don't know if that's all to be delivered or not really sure where it's going, but you can see that it was actually the gold flowed from, rather than from west to east, it went from east to west based on the price, I think, based on the price discrepancy between London and New York. I think what happened is it's just been a giant arbitrage.
Well, what does that
because
mean? Is it
that's, yeah, the spread had gotten, I think when it first broke back in March, when it first broke, I think there was a $40 to $50 spread between New York and London. And effectively, for less than $5, they can sell the higher price and buy the lower price, pay for the transportation, and still have a profit. So, and I think the spread right now is about $11, so it is still arbitrageable.
So what does that mean in terms of the price? So they're playing games with the markets, with the price difference on one side of the ocean as to the other. One market, LBMA, and COMEX in the other. When are we going to hit the what we've all been waiting for, which is this big failure to deliver, where somebody comes in one day and says, "I'll take all $2 billion of your gold right now." When do we get that? Is what people are asking for now, which evidently the banks are buying gold. Central banks have been buying gold. When do we get that big price move up from the people that are demanding delivery?
Well, as I mentioned, you should have seen a big price move in the month of May. However, the Bank for International Settlements was more active in the month of May than any month going back 3 years. I think the number is 145 or 146 tons are standing for June delivery. That's about triple the highest month I can ever remember. June and December are usually the largest delivery months. And the highest I can remember was something like 47 tons or thereabouts. But this month is like triple that. So there's huge demand, and interesting that the month started off lower. In other words, there's queue jumping. People are buying contracts specifically to get delivery. So the amount that's standing for delivery has actually increased almost every single day since first notice day, and that has been happening over the last year and a half. But if you go back even 2 years ago, that never ever happened.
So you're just saying that the Bank of International Settlements, the BIS, they're supplying the market so we don't have a failure.
Well, that's what it looks like. They are supplying the market to try to tamp down the price.
How long can they, how long can they keep Now they're actually having to put not instead of futures contract because people are standing for delivery. People forget the futures. Okay, that's what they're saying. They're saying roll that truck that out here to this loading dock, and we're going to pick it up. So now we've gotten beyond the futures contracts where they are just put that on a forklift and drive it right out here on the loading dock.
Well, you're asking when. I mean, there's no way to know or pinpoint a date as to actually when the failure to deliver is going to happen. But the system has gotten so large versus the amount of gold available to deliver. And once you get a real crack in the credit markets or a questioning even of the credit worthiness of the U.S., you'll see capital flow to gold and just clean that market right up. And I've said for a long time that once that does happen, gold and silver will go into hiding for fiat. In other words, people aren't going to sell their gold or sell their silver for fiat.
The smart money. Now's the time you got to be buying gold and silver. I mean, you're going to be looking back on this. Really. I mean, if you tell people this, and if you brought gold last year, a year and a half ago, when it was 12 and 11, and in that range, you'd say, people, it's just not going up. What is it now? 17 and change. And what is silver? 17 and change. We're about 100 to 1 gold to silver ratio, which is not even the record. I mean, it was much higher than that. I mean, it's all out of whack, right? I mean, is now the time that people should be getting whatever gold they can get their hands on? You're a broker. Can you get your hands on ounces of gold?
The supply has gotten better. We do have more supply than what we had a month or 2 months ago, but it's not about price, Greg. You're asking, is now the time to buy? The time to buy is whenever you have excess capital that you don't want to leave in a banking system that basically is going to claim your capital. The idea is, and I've said this also for years, you should count your net worth in ounces, not dollars.
And you're saying that you get a supply of American gold eagles. That's one, or you can get a supply of ounces at the moment, correct?
The supply is not as tight as it was 2 months ago. It's still very tight in silver eagles, and there is overall tightness. I mean, if we were having this conversation 4 months ago, I would be telling you that the supply is very tight. But the supply was tighter a month or 2 months ago.
And what's the commission on, because you deal in this, what can you say? Let's say gold is $17.30 an ounce. What would you expect to pay for a gold eagle?
You mean premium, not commission?
A premium, okay, premium, yes, whatever.
The premium on a gold eagle now is $100, $125 in that neighborhood.
And premium on silver eagles?
And the premium on gold eagles, if you go back 2 months ago, the premium was over $200. Now silver eagles, you can expect to pay $26, $27 an ounce.
Wow!
So you're talking about $9 premium thereabouts. And that's a function of the U.S. Mint closed down. So there's demand for the eagles, but the supply, there's still a delay. If you ordered eagles today, you probably wouldn't get them for another 2 or 3 weeks, is my understanding.
So the long and short of it, how would you sum up the gold market in reference to the global massive money printing right now? Of course, we also, as Martin Armstrong has pointed out, we have this capital destruction. We have all these stores closing down. We have negative interest rates. Nenner brought up, how do you get paid a pension if you have negative interest rates? That's capital destruction. So we have this big yin and yang, big pull. How would you, characterize the gold market? I mean, at some point, something's going to break.
Well, Greg, understand that if you add up all the value of all the gold that's been mined since history, you come up to a number of about $9 trillion. So you have this massive, what is it? I think the number is 250 trillion in debt. And it's more than that, but 250 trillion in debt versus 9 trillion in gold. So I mean, the gold market is minuscule compared to the paper financial markets.
Yeah,
And in a reset, you're going to see the paper markets be reset downward in value, and you will see the gold market, the silver market, the actual physical asset market will be revalued higher.
do you think the debt is going to get wiped out? I mean, don't we have to revalue the debt that can't be paid back? I mean, we can't. I mean, they say it's 250 or 300 trillion or what? I mean, what is the real number? They lie about everything. So, I mean, are we going to have to write down a lot of this debt that cannot get paid back, that we're stacking up even right now with all these stimulus packages and $2 trillion bills, and we have another one on the way, more stimulus, more unemployment? I mean, aren't we going to have to write off the value of the debt?
Well, there's only two ways to get rid of debt. One is to inflate it away, or actually write it off. It defaults. In the U.S., I mean, I can't imagine the U.S. actually writing Treasury debt off, although I suppose it's possible. I mean, the preferred course of action for politicians is inflation, hyperinflation, because they simply cannot. There's no way to raise enough revenue via taxes to service the debt and actually pay it down. It's an impossibility.
I just, of course, that's the $64,000 question. When? That's really the question.
$4 trillion question.
Yeah. Sorry, we're talking about some real money, and all this. We're coming back to all this comes back to gold. All the debt comes back to gold. All the markets come back to gold. We had this big suck down of I think at one point it was down 2,000 points, the stock market. So somebody got a pie in the face, and I mean, it's been going up, and they've been printing money, and it's been going up, and I just wonder how long that can happen. We had Charles Enter was on Wednesday and says, I got all my people out of the market. We're not going to wait. We think we're looking for a kind of a sell off in the market, and bam, Thursday we had he was on Wednesday and Thursday we had a sell off. He thinks there's going to be lower highs and lower lows down to 5,000 Nenner. What say you?
That's a very difficult call, and we've warned our subscribers to not be short the market, because there is a possibility that we go right to hyperinflation. And if that's the case, I mean, look at the Venezuelan market. I mean, look at any hyperinflation. You'll see before the stocks, equities start to skyrocket, they do take a hit, and maybe we already took the hit. Were we to go into hyperinflation from here, you could see the Dow easy at 100,000. However, you'd still be losing purchasing power because markets go up slower than the currency loses value. So it's dangerous, in my opinion. It's dangerous to be short the market. But if you look at the equity market at this point, I mean, you're looking at 30 times earnings. We are so much more overvalued today than what we were 3 months ago. 3 months ago, when we were hitting the all-time highs, we were at record valuation levels, but now that earnings have completely collapsed, we're at record valuation plus 50%. So I mean, we're in a totally uncharted territory as far as valuation levels on equities.
And then isn't there a brokerage risk as well with all the derivatives? I mean, when you're buying stocks, everybody just thinks, oh, just like a bank, FDIC insurance, right? Isn't there? Can't we get an MF Global event?
You could have an MF Global event system wide, and that's one of the reasons Jim coined the phrase GOTS, GOTS, back around I think 2003, 2004. It stands for get out of the system, and the idea is with your brokerage accounts, you either want direct registration with the transfer agent, or you want the certificate in hand. Because if your broker goes bankrupt, and you've got shares at your broker, it could take years for that to clean up, and you have availability to get at or sell your stocks.
Wow. So it's kind of a dicey all the way around. It's kind of a dicey proposition. Stocks. I mean, you want to protect against inflation. You're saying that we get 100,000 Dow. Wait, wow, I quadrupled my money, but my expenses are up 40 times.
Right. Exactly.
Ah.
If you look at any hyperinflation throughout all of history, the stock market does go higher, but it goes higher much slower. And the typical number is about 50%. You lose about 50% of purchasing power, but you don't lose everything like you would in a bank or with fixed income.
Who is standing for delivery? So you just think big money is standing for delivery? You think it's overt? It's in your face. It's a huge trend that people are wanting the shares. Forget the GLD, SLV. Not the shares. We want the ounces of gold. We want the bars. We want the actual physical metal under our direct control in our physical possession.
Well, it's hard to pinpoint exactly who is standing for delivery, but I think it's safe to say it's pretty much across the board. You're probably seeing hedge funds, you're just money managers in general that are waking up to the fact that there is truly a massive problem in the credit markets. And in the past, if you go back, go back to World War II, the safe haven has always been the dollar, and an offshoot of that, obviously, are U.S. Treasuries. But if the problem is the dollar and if the problem is the credit worthiness of the U.S., then where's your next step of protection? The last step, and I said that basically all capital roads will eventually lead to gold. That is your safe haven. That is the ultimate safe haven. It's God's money.
And that's good. Bill Pony says the same thing. It's God's money. Nenner says that for the foreseeable future, this may be because every other dirty shirt has got ink and stains and gravy and junk all over it. But for the foreseeable future, the dollar's not going to sell off that much for the foreseeable future. Of course, sometimes people are wrong. I don't know.
Greg, that's because he's looking at the dollar versus the USDX, the dollar index. So he's looking at it versus foreign currencies. That's not how to look at gold. No. You look at the dollar. You look at the dollar versus gold.
He thinks gold's going to go up. Clearly, we're on our way up to 2026. Nenner.
If that's the case, then what he's saying is there is going to be a big drop in the dollar versus gold, but not versus the euro, not versus the pound, not versus the yen, etc. I mean, you're comparing fiat to fiat, and it's meaningless other than for trade. But as you mentioned, when gold was $1,100, $1,200 an ounce, here it is $1,700. That's a 33% drop in the value of the dollar versus gold. So in fact, not only the dollar, but all fiat currencies have dropped substantially versus gold.
Very good point. Very good point. Good way to look at it. Yeah. Okay. It's the only way to look at it. I mean, there has to be a yardstick, and gold is the yardstick. It doesn't change. An ounce of gold today was an ounce of gold 100 years ago, and it'll be an ounce of gold 100 years from now. That yardstick of an ounce does the dollar, or if you look at other fiat currencies, they constantly change. The price of gold does not, it's not gold that goes up and down. It's fiat currencies that go up and down versus gold. Yeah. And one of the things that you pointed out, and we're getting to it, I'm sorry, I'm kind of selfish. I had a bunch of other questions for you before we got to this, but what you wanted to talk about was the banks, which I've been kind of ragging on because somebody sent me this and went, they've stopped all reserve requirements. I went, oh, stop, I'm going to look this up. And then somebody else said, hey man, I have this link at the Federal Reserve, and Yeah, send it to me. And then I looked at the link, and then I got rid of it. And I Googled it and found the same. It's on the Federal Reserve website. And you don't have to be a economic genius to read the first line saying we no longer require reserves at all depository institutions, something like that. They do not require reserves. You can have zero money as backup in your bank. And you said to me, I want to talk about this. What is the signal that people should be getting for them to not, quietly, where nobody reports CNBC, Fox News. Hey, Neil Cavuto. Neil, you're not covering this? Hey, MSNBC. Hey, CNBC, you're not going to cover this? Hey, Fox, you're not going to cover this? Hey, New York Times, Wall Street Journal, your business sector, you're not going to cover that? You don't need any money in a bank? Sorry.
It snuck by me. I hadn't even heard about it until about a week.
It snuck by you because nobody reported it.
Yeah, I didn't see it.
But what does it tell? What should there be? I'm sorry, I ranted. I'm sorry. Please forgive me. What should people get for a takeaway? This is a big deal, or am I just nuts? I am nuts. But is this a big deal?
It's a huge deal. The idea behind lowering the reserve requirement is basically making it easier for banks to lend, and they did this back in the latter part of March. They went to zero, and that was a function of trying to make it easier for banks to lend. Now, with a zero reserve requirement, the reverse of that is it could create unlimited lending. So it's.
Go ahead.
If you go back when the banking system in the U.S. started, there was I think in the not when it started, but when there were first reserve requirements, I think it was 25%. And when the Fed was initiated in 1913, I think the number was either 10% or 13, and it's hovered in that range for 100 years. And the Fed it'll raise the reserve requirement when they're trying to tighten credit, and they lower it when they're trying to loosen credit. Well, getting rid of it altogether, like I said, the reverse of zero is infinity. So what they're trying to do is they're trying to reflate again.
What could go wrong? I mean, you're talking about this could, I want to know what could go wrong. I mean, what could go wrong? I mean, I'm just thinking to myself, I tell some friends this, and they go, I told one of my friends this, well, it's okay. They haven't had any requirements. No, they have. Now they don't. What could go wrong with 0% in backup? And this is the opposite of 2008, 2009, incidentally. Remember Jamie Dimon and his fortress balance sheet? Remember all that? Oh, the Federal Reserve, we got to get all this money into the banks. We have to have reserves. The banking system's healthy. I mean, number one, we can't have a stress test. That's over. You're not going to hear anything about that.
Right.
So what could go wrong?
Well, all sorts of things could go wrong. I mean, you could have banks lending to any type of project. I mean, there's what it does is it opens the door to more fraud. It opens the door to fraudulent lending, fraudulent borrowing. The bank could basically be busted, and it still won't matter because they can still lend. I mean, if they have zero reserves let's say a bank has no reserves at all. If there's a zero reserve requirement, that does not preclude them from continuing to lend.
So the bank can never go out of business.
Well, yeah, in essence, that's what a zero reserve requirement says. Is that they're not required to have any reserves backing your account, your deposits, and they can lend as much as they feel they want to, with no reserve requirement backing it. And then go one step further and look what the Fed's doing. The Fed is actually buying junk bonds. They're buying. They're putting junk bonds on their balance sheet, and the next thing will be they'll be buying stocks. The Swiss National Bank already buys stocks. The Bank of Japan already buys stocks. So what's backing the money itself? It's no longer pristine credit. It's anything and everything in the credit market. And like I said, the next step is probably the Fed will be buying stocks.
Are we, I talked to John Way. I wish we'd have got this on camera. And I just figured we were getting ready to sign off. I just said, so is this a sign that we're getting close to the end of this little Ponzi scheme that we have? A huge Ponzi scheme. So is this a sign that we're close to the end of this massive Ponzi scheme where they criminally manipulate gold and silver and LIBOR and futures and they pump money. They have they buy bonds. They buy all this stuff. They print massive amounts of money. They lie. They loan money overseas. They loan it back over. I mean, are we getting? Is this a sign? Zero reserve requirements. Is this a sign we're getting close to the end of this global Ponzi we've all been living through?
I'll answer that with a familiar saying: "Desperate people do desperate things," and that's pretty desperate. I mean, what you're saying is, how safe is a banking system that has no requirement for reserves?
Wow. Should you have money in a bank? Should you have some cash? Is cash going to work? I mean, years ago, a guy, Bob Moriarty, and this really stuck with me. He just said, I don't know when this is going to happen. And he runs a site called 321 Gold. I have to credit him with this. He says, but there's going to come a point where cash is going to work really good for a short amount of time.
Right, a couple of weeks.
And so, yes. So, should you have some cash? What should people be doing? I mean, what should the little guy be doing? I have people all the time going, well, what should the little guy do? I can't buy gold. Okay, some people are going to just get hammered here. I think we do have a window. They're trying to buy time. Obviously, they're trying to buy time. So, what do I do with the Fed with now cutting rates to zero and they're buying time? What should I be doing?
Well, what I do personally and what I've suggested that people do is if you have large bank balances, I use junk silver as my bank account. I have it vaulted. It's at a private two private non-bank vaults. So if I get a inflow of cash, I put it into junk silver. I keep enough to pay maybe 60 to 90 days of bills in a bank, and yeah, I have a little bit of cash that I've pulled out of the bank for physical cash. Like I said, I think that will probably work for 2 weeks or maybe a month. But your savings should be either in silver or gold, and have it. You should have it vaulted, because obviously there's the risk of a home invasion or whatever. You're getting robbed. So if you want to store at a private non-bank, you do not want to put it in a safe deposit box. That's a total oxymoron, because when the banks go, you will have not any access to your safe deposit box. And if you look at what happened back in 1933, 34, when the banks closed, people lost everything they had in safe deposit boxes. So, like I said, wow. I use junk silver, and if I need a large amount for any reason, I just sell what I need and have the funds wired 2 business days later.
We are at it's so weird. I remember when gold and silver, the 80 ounces of silver equal an ounce of gold, or 60, and then we got to 90, and then we broke 100, and I think we got up to 120 something. 120 ounces of silver equal an ounce of gold this year, and now we're at about 100 to 1. About. I mean, as gold is 1730 and silver's 1740. I mean, about 100 ounces of silver equal an ounce of gold. Is this the new normal, or is this a sign that things are going to break?
No, it's not the new normal. I've talked about this before. Silver comes out of the ground. 10 ounces of silver comes out of the ground for every 1 ounce of gold. That's basically the ratio, the gold to silver ratio in the Earth's crust. And if you go back 100 years ago, 200 years ago, 1,000 years ago, the ratio was generally 15 or 16 to 1. And the reason it was not 10 to 1 is because of the weight. Silver was discounted to account for the difficulty of moving the same amount of capital from point A to point B. So man discounted it to 15, 16 to 1. Then it got further and further discounted. Now we have, financial, like COMEX, we have paper ways to trade it, and here we are at 100 to 1. Silver is the cheapest asset on the planet. And in this reset, silver, as Jim puts it, silver is going to be gold on steroids.
You have jsmindset.com. You have a subscription service over there. You get to hear you and Jim and another great guest there every week discussing what's going on. I think it's priceless to hear you and Jim give your immediate reaction to what's going on. I don't have you on every week, but I wish I could have you on more, and I probably should. But you guys have that. Tell me about your subscription service at jsmindset.com.
Well, we have a public side and the subscription side. The subscription side costs $129 a year. I'm not writing as much as I used to. We have another couple of other writers that we do for subscribers only, many of their articles. And we do a weekly call on Saturdays. It's a recorded call. There's 4 of us. And it's like getting a 1-hour seminar every week. So you're getting 50, and actually more than 50, because if you go back to March and April, there were weeks where we did 2 or 3 interim calls during the week. So you get a chance to hear from us and what we're thinking on current events on a weekly basis.
Yeah. Things are changing so much, and then the stand for delivery thing, which is, triple, quadruple. It's way higher than what it normally has been in even times when it was really high. You're saying right. It's double, triple. It's a record. This
is a blowout.
It's a blowout record of people standing for delivery at COMEX, LBMA, whatever. Wow. So I guess that's a sign. So I love how safe do you think your banking system is when there's no reserve requirement? Wow.
Well, it's like I said, desperate people do desperate things, and rolling the reserve requirement back to 0 is total desperation.
I do think that unless something really goes wrong, and I think the anarchists and Antifas, the terrorist group, is trying to crash the country. They appear to be trying to crash the economy, trying to crash the country. Are they not?
Right. Yeah, it's pretty obvious. That's the goal behind all of this. Get rid of the police. And look what has happened in Seattle. It took less than 48 hours for that thing to just go totally upside down.
And the governor's saying it's okay. He has control of the National Guard. The mayor is like, oh no, they evacuated the building. They're doing this as trouble, dude. They actually told the cops to get out. They weren't overrun. They actually got moving trucks and moved out.
Well, but what I'm getting at is you are now seeing in Seattle, you're seeing a real time, and I don't even want to call it an experiment. You're seeing the results, the ramifications in real time of where we're headed as a nation.
All compliments of the blue state Democrats who like this. You're not hearing Nancy Pelosi talk out about this. You're not hearing Steny Hoyer saying this is awful. You're not hearing Schumer complaining about this, and our lying legacy media, which I can't wait for it to all go out of business, is calling it a festival in downtown Seattle. It's a festival, and Donald Trump's just mad. Orange Man just mad about it. It's outrageous. Can you imagine the people with businesses down there, many of whom I'm sure were Democrats?
Right. Yeah, it's total insanity. But my point being, you're actually getting to see it with your own eyes. You don't have to. It doesn't have to be even reported on. All you have to do is watch videos of what's going on.
Yeah, the Democrat wet dream, their wet dream of how they want society to run.
Well,
Warlords, guns.
Greg, you're seeing the results already. You're seeing the cities people are fleeing the cities already. They're moving to the suburbs. People in the suburbs are moving rural. people are moving away from the cities because they see with their own eyes what's happening. The rule of law is breaking down.
I don't see, I've been saying this on my weekly news wrap-up, Bill. I don't see how. I mean, I'm sure there's some crazy Democrats that are down there that they're, Marxist, fascist, communist, whatever, that they just love this. This their change. But there's plenty of Democrats out there that are like, whoa, this is way too crazy. I mean, what are you doing? I don't see how this is a vote getter for large sections of Democrats. I mean, you're burning down black neighborhoods. How are black people going, yay, let's burn it down. I don't want to have a store to go to or a job to go to. Yeah, I'd rather have to go 17 miles out to go buy my food. Yay, let's burn it down. How does that help black people? How does that help Democrats? How does that help anybody?
Right, and if you take the average Democrat, they're, like I said, they're seeing it with their own eyes, and I don't believe they're approving of it. You have, call them the vast minority, trying to basically take the system down. That is their goal, is to destroy the country.
Yeah. No. Yeah, this idea about reform, they don't want to reform it. They want to destroy it. They want to take it over.
Right.
Which is, why we have the Second Amendment, isn't it? So.
That's correct.
All right. Well, listen, Bill Holter, your subscription service, I'll put that on the page. I, love JS Mindset, have loved it for more than a decade. He's been having this thing since, 2003 or whatever, and you're his...
Yeah, it's been almost 20 years.
Yeah. You're his business partner. You have TRX. Just a couple of quick... I know you're not a... this is Jim's deal. But you know something about TRX. How's that going? Where's the stock at now? And your Tanzanian royalty, is that right? I don't mean to put you on the spot. I'm sorry.
It's Tanzanian Gold Corp.
I'm sorry. Okay, so I didn't even know it. Okay, how's it going? He's opening up mines. He's opening up actual production. That's what he told me the last time.
Well, yeah, we're expecting the 43-101 resource update any day now. And as I understand, they are actually in production. I believe that started sometime in mid-late May. So I'm waiting to find out, how the production's going.
So you're going to actually take ounces out of the ground?
Yeah, it's happening.
Yeah,
yep.
It's happening. Okay, that's a nice update. Very good. All right, thank you very much, Bill Holter. Bill Holter, for coming on and talking about all things gold and money and banks and enlightening us and give us an update about what's going on in this early Sunday release. Bill Holter, thank you for joining us today on USAWatchdog.com.
Thank you, Greg.